What is liquidity? What are liquid assets? What are illiquid assets? How can you build your liquid assets? What is the formula of calculating liquid assets? Well, in this video, we will be covering all these questions. So without wasting any time, let's straight away start today's video. Liquid assets include cash and other assets that can quickly be turned into cash without losing value. You always want some of your assets to be liquid in order to cover living expenses and potential emergencies. But in a larger sense, think of liquidity as a spectrum. Some assets are more readily convertible into cash than others. At the far end of the spectrum are illiquid assets, which are very hard to value and sell for cash. Now let's answer this question, that what is liquidity? Liquidity describes your ability to exchange an asset for cash. The easier it is to convert an asset into a cash, the more liquid it is. And cash is generally considered the most liquid asset that is there around. Cash in a bank account or credit union account can be accessed quickly and easily via a bank transfer or an ATM withdrawal. Liquidity is important because owning liquid assets allows you to pay for basic living expenses and handle emergencies whenever they arise. But it's important to recognize that liquidity and holding liquid assets comes at a cost. In general, the more liquid an asset is, the less its value will increase over time. Completely liquid assets like cash may even fall victim to inflation, the gradual decrease in purchasing power over time. To protect against inflation and save for long-term financial goals, you'll probably want to sacrifice some liquidity and lock assets into investments that grow your wealth over time, like investment securities or real estate. But assets like real estates as well as art and jewelry may be considered highly or even exclusively illiquid. This doesn't mean that you will never receive cash for them, only that it can be more challenging to value assets like this and then turn them into cash. What are liquid assets? Liquid assets are assets that can easily be exchanged for cash, while assets are valuable possessions that can be converted into cash. Not all of your assets can be sold for cash right now or without taking a loss on the sale. Common liquid assets include cash. Cash is the ultimate liquid assets. Beside holding physical currency and ATM withdrawals, cash can be accessed via your checking account and peer-to-peer payment apps. Treasury bills and treasury bonds. T-bills and T-bonds are highly stable and highly liquid investments backed by the full faith and credit of the United States government. As a consequence, they can instantly be sold for cash on the secondary market if you need their value before they mature. Certificates of deposit. CD can earn you higher APYs than checking or saving accounts, but they also come with tougher withdrawal restrictions. To access the money held in a CD before its maturity date, you may have to pay a penalty, typically a few months of interest. No penalty CDs are an exception here and they earn lower APYs. Bonds. Some investors buy bonds and hold them to their maturity date. But the secondary market for trading bonds is vast, meaning that many types of bonds are relatively liquid investments. Like any security, you may end up selling bonds for less than you paid for them. Stocks. Equities may be sold on stock exchanges almost instantly, and publicly traded stocks are considered very liquid. You usually receive cash from the sale within a few days. As noted above, you may end up selling a security like stock for less than you paid for. Exchange traded funds, also known as ETFs. ETFs are investment funds that trade like stock on public exchanges, making them fairly easy to sell quickly. While they are less risky than individual stocks and bonds, you still may end up having to sell ETFs at a loss if you need your money quickly. You will generally receive cash within a few days. Mutual funds. While they provide easy diversification, mutual funds only trade once a day at the market close. This makes them slightly less liquid than stocks and ETFs. You generally receive proceeds from a sale the next business day. Money market funds. Money market funds are a type of mutual fund that only owns highly liquid assets like cash, CDs, and government-backed debt. Because their components are highly liquid, their value is highly stable. Like mutual funds, you generally receive proceeds from the sale the next business day. Precious metals. Precious metals can be both liquid and illiquid. In some states, certain gold and silver coins can be used as currency, meaning it's hypothetically as liquid as cash. Physical precious metals can also be exchanged for cash via dealers. But depending on where you store your precious metals, they may be less accessible. What are illiquid assets? Illiquid assets are not easily sold or converted into cash. Some examples of illiquid assets include real estate. It can take weeks or months or even years to sell real estate. While it's possible to access the equity you have built up in a home or an investment property through a home equity loan, home equity line of credit, or a reverse mortgage, setting up these arrangements takes time and effort. Collectibles. Antiques, artworks, baseball cards, jewelry, and other collectibles can be difficult to value and hard to sell. Stock options. Many companies, not just the tech startups, offer their employees stock options as part of larger compensation package. Typically, a new employee is promised a set amount of stock in the company that employs them if they remain with the company for a given period of time. Stock options can be very valuable, but they are highly illiquid assets, as you must remain with the company for years before you own the stock promised to you. Private equity. If you can invest in private equity assets like venture capital or funds, you have the potential to achieve big gains. However, private equity funds often come with steep restrictions on when you can sell your shares. Estates. Before you can access the assets in estates, debt must be paid and taxes assessed. It can take years to fully benefit from an estate. Intangible assets. Intangible assets are concepts or ideas that have value, in some cases a very great deal of value. Intangible assets includes things such as corporate goodwill, brand recognition, intellectual property, and reputation. It can be very difficult to assign a market value to intangible assets, and they are by nature extremely liquid. How to build your liquid assets? Holding some of your total net worth in the form of liquid assets is a key part of sound long-term financial planning. Above and beyond your checking account, you should hold some liquid assets so you can rapidly get cash when you need it the most. For instance, many financial advisors recommend that you have at least 3 to 6 months of expenses in liquid assets in an emergency fund. Should you lose your job or experience financial hardships, if you don't have enough or any money set aside in an emergency fund, take a survey of your assets. If you have high amount of illiquid assets tying up your money, consider liquidating some of them to finance your emergency fund. If you don't have illiquid assets you can or want to liquidate, aim to set aside at least a portion of your paycheck to grow your emergency fund. One of the best places to keep an emergency fund can be a highly yield savings account. Once you have a solid emergency fund in place, you can begin to use less liquid assets to achieve your longer term financial goals. Liquid assets formula. The consolidated liquid assets are cash and such securities that can be readily subjected to cash conversion without the current liabilities. Let me tell you the formula of the liquid assets. Well, the formula is market securities plus cash minus current liabilities equals to liquid assets. Alright guys, we have reached the very end of this video. This was a complete guide on liquid funds. If you want to learn more about investing, download Freedom app from the Play Store. In this, you can learn about investing in multiple government schemes like Sukanya Samriddhi Yojana, post office schemes, etc. You can also learn about how to invest in mutual funds, stock market, etc. There are over 1,000 courses on this app, and you can find courses on personal finance, business and farming. So download Freedom app, which is India's #1 livelihood platform. This is Abhinav Sehgal signing off.